Welcome to the deep dive. For years we've heard about this robotics revolution, right? Always seemed like something way off, kind of sci-fi. But what's really striking, digging into our sources today, especially this piece, The Robotic Rebirth of Warehousing, is how now it all feels like immediate. We're talking the next 3 years, not decades down the line. It's happening. So our mission here is to really dig into where this is actually taking root right now, and that's warehouses, and figure out the big reasons why it's speeding up so much. We'll unpack those forces, talk about a key player right in the middle of it all, and just get why this automation wave is, well, such a big deal. Okay, so let's unpack that. Why warehouses? And I mean, why right now? What's pushing this change in a place most of us probably don't think about much?
Yeah, it's a great question. And what's crucial is this isn't just slow change. It's like hitting the accelerator. And it really comes down to three urgent things happening all at once. First, and this is probably the biggest one, it's just a massive labor crisis. We're seeing unfilled logistics jobs, like warehouse jobs, basically double since just 2020.
Yeah.
Doubled. Now think about what that work is actually like. I mean, the average person is walking 12, maybe 15 miles in a shift.
15 miles, wow.
And lifting heavy boxes constantly. Sometimes it's freezing cold, sometimes it's boiling hot. It's just incredibly physically demanding.
I can imagine.
So you get sky-high turnover rates, people just burning out. And because it's so hard to find workers, wages in logistics are climbing way faster than other sectors.
Yeah.
So you reach a point where if you just can't find people or cost too much,
Yeah.
automation stops being a nice-to-have. So, well, it's essential just to keep the doors open.
Right. It becomes survival.
Exactly. Then number two, you've got the sheer complexity of e-commerce now. We all expect stuff fast, right? Like 2-day delivery, sometimes even same day.
Oh, yeah. Guilty.
We all are. But think about it from the warehouse side. They're dealing with millions of different items, SKUs, stock keeping units, getting the right thing out the door that fast, traditional systems, the old ways of doing things. They just can't keep up. They're completely overwhelmed. And then the third piece is, well, artificial intelligence. AI has finally gotten, good enough. It's reached the point where it can actually manage these huge, complex, autonomous operations, run the whole show. So it's like this perfect storm, right? You've got a need you can't ignore, demand that won't quit, and the tech is finally ready.
That labor picture you painted is, yeah, pretty sobering. It really does sound like that phrase where humans fear to tread. And honestly, who can blame them? Walking 15 miles, lifting stuff in crazy temperatures, I mean, wow. So when the work's that tough and the people just aren't there, you have to find another way. It makes perfect sense. Okay, so given how big these challenges are, who's actually, figuring this out? Is there a company that really stands out, that embodies this shift?
Absolutely. There's one company that's right at the epicenter of all this, and it's Symbotic. And what they're doing is, well, it's more than just swapping robots for people picking boxes. They're basically rethinking the whole warehouse. Their main thing is this AI-powered robotic system. It turns the warehouse into this single, smart, integrated system for storing things, getting them out, sorting them, the whole process.
So not just automating one task, but the whole flow.
Exactly. And the results are pretty dramatic. Stuff moves through their warehouses 5 to 10 times faster than the old way.
5 to 10 times.
Yeah. And get this, they claim like 99.9% accuracy, which is huge because shipping errors cost companies a fortune.
Oh, I bet. Wrong item, lost item.
Yeah. And crucially, this isn't some, startup burning cash on a cool idea. Symbotic is a big deal. Like a $28 billion company. Their latest numbers, Q2 fiscal 25, they did $550 million in revenue. That's up 40% from the year before.
40% growth in this environment. That's huge.
It is. And their adjusted EBITDA, that's a key profit measure, went from $9 million to $35 million. So they're making money.
And that difference you mentioned between real revenue and just like speculative hype, that feels really important here. Can you maybe expand on that? Like, why has Symbotic actually managed to turn this into a profitable business when maybe other robotics companies are still figuring that out?
Yeah, that's a really key point. A huge factor is the validation they've gotten from massive blue chip companies. Take Walmart, biggest retailer in the world, right?
Right.
So in early fiscal 2025, Walmart actually sold its own internal robotics division called Advanced Systems and Robotics to Symbotic.
Wait, Walmart sold their robotics unit to Symbotic.
Exactly.
Yeah.
That's not just buying a product. That's basically saying, okay, your tech is the future, and we want a deep strategic partnership. It was this massive vote of confidence. And they also work with other giants like Albertsons, C&S, wholesale grocers. These are deep partnerships solving really core problems for these huge companies.
Wow. Okay. Selling your own unit to them.
Yep.
Yeah, that's about as strong an endorsement as you can get. But you also mentioned something about a compounding advantage. What's that about? How does that work?
Right. So think about how something like, say, Waze or Google Maps works.
Okay.
The more people use it, the more data it gets on traffic, on the best routes, right?
Hmm.
And that makes the app smarter and better for everyone. It feeds itself.
Makes sense. The network effect.
Precisely. Symbotic's AI works in a similar way, but for warehouses. As they install more systems in different places for different customers, the AI learns from literally billions of pick-and-place actions. It sees what works best in all these slightly different environments. So every new warehouse they automate actually makes the entire system smarter and makes the next deployment even more efficient.
Ah, I see. So each customer benefits from the learning across the whole network.
Exactly. It creates this kind of data moat, this learning advantage that gets bigger and bigger. It makes it really tough for a newcomer to just jump in and compete without that scale and that data history. Which brings us to, how big is this whole opportunity anyway?
Yeah, what's the market look like?
So right now, the warehouse automation market is maybe around $25 billion globally.
Yeah.
Ish.
Okay.
But the projections, they're pretty staggering. You look at firms like Precedence Research, Grandview Research, they're seeing this market hitting anywhere from $85 billion to maybe $110 billion by the mid-2030s.
Wow, hold on. From $25 billion to potentially over $100 billion in about 10 years.
Yep, that's like a 3.5x to 4.5x jump. They're forecasting annual growth rates of like 15% to 18% consistently through 2034. That's massive growth.
That's serious. Yeah, that's serious scale.
And here's the kicker. We're still really early. Right now, the best guess is that less than 5% of warehouses globally have this kind of advanced automation.
Only 5%.
Less than 5. The projections suggest that could reach maybe 15% to 20% by 2035. So even with that huge market growth we just talked about, there's still this enormous runway ahead just in terms of adoption.
So, okay, huge market, huge growth potential, still very early days in terms of actual penetration. What does this all mean for the bigger picture then, especially for a company like Symbotic?
Well, it means they're sitting in a pretty sweet spot, right? They've already got a huge backlog, almost $23 billion in projects they're already committed to deliver.
23 billion just in the backlog.
Just in backlog. And think about their current customers, like Walmart again. Walmart has over 200 distribution centers just in North America. Symbotic is only in a fraction of those right now. So the potential just to expand within their existing customer base is enormous. Typically what happens is a company tries it out in 1 or 2 warehouses. They see these big cost savings, often like 30% to 50% lower operating costs.
30 to 50%, that's huge.
It's massive. And once they see that, the business case to roll it out across their whole network becomes pretty undeniable. So huge growth potential just within the companies they already work with, let alone new ones.
Okay, it sounds incredibly compelling, but, no tech is perfect, no rollout is seamless. Let's do a quick reality check. What are the actual hurdles, the challenges Symbotic or maybe the whole industry faces?
Absolutely. Good point. There are definitely real challenges. For one, deploying these systems is complex. It's not off the shelf. Each one is kind of a custom project, and it can take 18 to 24 months from signing the deal to having the system fully up and running.
Right, so it's a long process.
It is. And that can make revenue kind of lumpy. Big chunks might land at certain points rather than a smooth curve.
Okay.
Also, the tech, at least right now, works best in really big, high-volume warehouses where the types of products, these simirs, are somewhat predictable.
Okay.
So it might not be the right fit yet for smaller companies or places with constantly changing, really diverse inventory. That limits the immediate market somewhat. And of course, there's competition. Amazon has its own robotics arm, Kiva Systems, which is obviously huge within Amazon's network.
Yeah.
And you've got a lot of venture capital pouring into newer startups trying different approaches. So it's not like they have the field entirely to themselves.
Makes sense. Deployment time, suitability for certain types of warehouses, and competition. Those are real factors.
They are. But, and this is the crucial thing, you have to weigh those against that fundamental labor crisis we talked about at the start. The sheer difficulty and cost of finding people for these jobs.
Yeah.
It's such a powerful driver. For a lot of these big companies, automation isn't really about getting a slight edge anymore. It's becoming about, survival. It's not speculation for them, it's necessity.
So the why is just incredibly strong.
Overwhelmingly strong. And if we zoom out a bit, think about the whole robotics revolution. It seems clear it's coming in waves. Warehouses are kind of wave one, right? Because the economics, the need, it's just undeniable right now. It makes too much sense not to automate. Manufacturing's probably next or happening alongside it, especially with collaborative robots getting better. And then maybe way down the road, you get the humanoid robots doing complex stuff out in the consumer world. That's still more, future. But the key point is, we don't need to wait for that sci-fi future. The first really big, impactful wave is crashing down right now in logistics.
Okay, so wrapping this up then, the big takeaway from this deep dive seems to be robotics isn't some far-off thing. It's here. It's now. And the most obvious, most impactful place it's happening is in warehouses, driven by these huge economic and labor pressures that just aren't going away.
That's exactly it. And a company like Symbotic is just such a clear, tangible example of that shift happening today. They're generating real money, significant revenue, by solving urgent, critical problems for massive companies. It really shows that in this space right now, actual results and solving real needs, that matters way more than just potential or hype. Profits matter.
Right. The robots are already here. They're already working, changing how everything gets to us. So maybe a final thought for you listening. Beyond just thinking about investments, consider how this huge shift in logistics and just moving stuff around, how might that ripple out? What other industries that seem really manual, really static right now might be next? What other areas might be ripe for this kind of rapid, economically driven automation that maybe we haven't even thought much about yet? Something to chew on.